Well. Welcome, everyone. Good to have you here. Got a little bit of volatility on the chart. Price moved quicker than we expected earlier today, but hey, that's the market for you in a nutshell. Good to have you here, everyone. In today's live stream, we are going to cover several Elliott wave scenarios, and we will be able to figure out the highest probabilities. So this live stream will also give me an opportunity to talk more about certain alternative scenarios that I posted in the video earlier today. Or not really alternative scenarios. It was just like, well, as long as the 618 at 80.8K wasn't touched, it's not really too important to talk about those scenarios. And then very soon after, we touched the 618. Which I don't even know. I think 15 minutes later or something, price just started flying. So I think I uploaded a video probably somewhere down here, and then very soon after, poof, 618 was touched. So that of course is a good reason to then go live and talk a bit about the price section, different scenarios, and again also my approach. The reason why in the previous video I started to talk. Or I decided to talk at the end of the video about my approach instead of probabilities is I got a couple of questions. Of course, I always get questions in DMs and stuff, but specifically about, like, what do you look for? How do you trade? And if I focus on specifically Elliott waves, there's of course certain things that I want to see. So I shortly highlighted a few things in the approach section at the end of the video. But in this live stream, I'll probably be able to cover a few more things. And then we'll see. I'll probably be online for the remaining 50 or for the next 55 minutes. And then at 7 p.m., I'll kick my ass to the gym. Has to happen. I got to get to the gym. So very nice. We're going to start with the analysis. Welcome, everyone. Good to have you guys here. Welcome. Thanks for popping in. And we're going to have a look at the charts. I'll get back to you, everyone. What a day indeed. And I see some people here that not always are able to catch the live stream, like VE or Pink. You're right on time as it touched. Yeah, exactly. I mean, it was very, very quick, right? Like the 618 got touched in no time. So let's just jump into the start, get the analysis out the way, and then we get into chatting and Q&A. And then the people that are here for the analysis are served at the beginning of the video, and the people that want to hang around, chatting, Q&A, sharing thoughts, some analysis stuff, we'll do that afterwards, right? So everyone happy. Okay, very, very nice. Now, one thing that I've been saying in the Gold Discord channel earlier today is, so many people are looking for the WXY. I would love it to not see it happen, like for it to become invalidated or for it to not be so obvious, because it is very obvious. And if many people look into the same direction, what's the chance of price actually moving into that direction? So of course it's a scenario we keep in mind, but how nice would it be for price to actually not complete a WXY double zigzag and instead does something else? Now, we do have to talk about the WXY and specifically this structure to the downside. And when we go through the different scenarios that I have here for you, we will also again talk about this range. And maybe after going through these folders, I might just do like a full analysis from nothing on the chart to actually going through the different corrective structures and then recount this move down, just for the people that like to know, okay, so how do I start with counting a retracement and a corrective structure? Anyway, this is your WXY, right? A three-wave corrective structure. You've probably seen the video like maybe even a few minutes ago. So this all sounds very familiar. Now, many people here, of course, looking for some triangle structure, and then you look for a move down, and you want to see an ABC, and then you have wave Y, target area 64, 50.2K, and then move towards the upside. right? So that is a very obvious scenario that has been on many charts for a very long time, I can imagine. Now, it requires you to have a wave A, B, and a wave C. And this wave A, because we touched the 618, which I'll show in a second, starts to be in a little bit of trouble. So let's then jump into the 1 hour time frame. Okay, so I actually removed my 1 hour time frame folder, but that doesn't matter. So we have our wave W, right? Wave W, ABC in that case. Then you have your wave X, and then eventually you need your wave Y. Now with the triangle, low probability zigzag to the upside remains low probability, even if you want to count it an expanding diagonal, as then your wave A, B, and then a wave is C. So because an expanding diagonal is very rare, automatically low probabilities, but it's not an invalidation. So there is a potential of putting an E here. I do realize on some charts, I believe this high took out this one, which would actually be an invalidation. But, nonetheless, alternatively, we were looking for price to take out 81K in the previous update on Friday. Take 81K, and we were looking for price to move towards the upside, which is what happened. So very happy, people happy, and then we look for price to move down. Now, because price here touched the 0.618, taken from this high to the low, let me now put some stuff on the chart to clarify a few things. So, okay, we're looking, right, for a wave A down. That's what you want to see. Now, if you put your wave X over here, and that's the end of your triangle, or whatever you want to count there, and this is the start of your wave A, it means that you need a wave 1, a 2, a 3, you need a 4 and a 5. You need a 4 and a 5. The fib that I just took here, 618, is taken from this high to the low. The fact that the 618 is touched invalidates wave 4. So let's just put it on the chart. So then you have your 3, you want your 4, you want your 5, very nice. And then you take a fib from the highest point of the 2. And I chose the highest point just to play it safe, right? Then price needs to retrace the highest, right? It's the highest 618 you can pull from this high to the low. Not from this one, not from one of these, that one. And what we want to see is then, of course, wave 2, and arguably you have then a 1 and a 2, 1, 2, 1, 2, maybe another 1, 2 here, or you put your wave 2 somewhere on the right. But nonetheless, this size wave 2, you want to see it represented in a wave 4, right? Wave 4 and 2, pretty similar in size. You should be able to see a similar ratio between a 2 and a 4. It should at least look like they're of the same degree, right? Of course, if a wave 2 is very long, wave 4 can be very short, right? But very short is generally still ending at least after a 0.382 fib time, right? So you put on the 382, and then even if you look at the small ranges here, they did not even end after the 0.382. So therefore, it makes it very unlikely that this is a wave 4, right? Compared to a 2 over here. And I guess if we just look from a ratio perspective, right, you have a move down, big sideways move, and another move down. Looks a bit 3-wave, It doesn't really look like a nice 5-wave structure after some triangle X whatever shenanigans, right? So, okay, cool. So we touched the 0.618, invalidating a wave 4. Now your wave A, therefore, if the X pivot is put there on your chart, right, or in this case on my chart, end of triangle, if you want to look for a wave A, this can be a wave 1. You need a wave 2, and then a diagonal. Now, this is going to take a little bit of time because we only finished then your wave 1. You look for a 1, a 2, a 3, a 4, and a 5. In this case, we call it a leading diagonal. And all of the waves have to be 3-wave zigzag family structures. So this is your ABC. In your wave 1, you need a zigzag family structure in your 2, 3, 4, and 5. Now, these moves are not very deep, right? because there are certain rules and guidelines to the length of your 3 and your 5. But nonetheless, it's not really worth looking at a diagonal just yet until you are basically at your 3, 4, right? And other scenarios really start to fill. Then it becomes a bit of a problem. I see some questions in the chat. I can see the chat moving on the right. But I'll answer your questions after sharing my thoughts. And then we'll get to the questions, which are very much related to analysis anyway, so we can continue talking. So a diagonal is low probabilities because it's too early. It's too early. We only have a 3-wave move down at the moment if you want to finish your X here. Now, just before going live, there's only one way that I would be able to manage a wave X on that high. And this is very rare, and actually not everyone may know even about this in Elliott waves, because I have never seen it in my life, and probably, therefore, putting X down here is wrong. But I want to share it anyway, because it's a little bit of education. So if you would count this as a triangle, A, B, C, D, right? Those are your first 4 waves. Most commonly, of course, your wave C is complex, right? If it's not simple, or at least if one of the waves in a triangle is complex, generally wave C. However, in very rare occasions, even your wave E by itself can be a triangle. Now, I don't really like to count that, but nonetheless, you have A, B, C, D, and then you have like a B, C, D, E, ending on that high, actually, so one higher. Now you can see how awkward this is, and right. So I need to go one time frame now. So you then have to count this as zigzag, zigzag. This is your C, right? So that kind of double zigzag, whatever. Then you have your D, and then you have your E, which then creates a triangle like this. Inside wave E of the bigger triangle, it is allowed. It is allowed, even with a complex C. It's actually written in the book. I don't know what page I had last time to check the triangle stuff. Oh, here. Oh, I just opened it on the right page. So, right, this is the book, right? Just to show you here, Elliott wave principle, okay, and says sometimes one of the subwaves, usually wave C, is more complex than others. We know that stuff, right? We know it. In rare cases, right? And then it says in between brackets, usually wave E is itself a triangle, so that the entire pattern protracts into 9 waves. So, yeah, right? In rare cases, one of the subwaves, usually wave E, is itself a triangle, so that the entire pattern protracts into 9 waves. Yeah, it's very rare. I've never seen it, so I kind of go against counting this as a high probability scenario. So yeah, take it, take that with a grain of salt, I suppose. Okay, but that then leaves us with the question of the WXY, right? So the only way really to get something going here would be to put the triangle end on this high, and then be like 1, 2, 3, 4, 5, correction, and another leg to the downside. I don't know. I'm not really fancying something like this. I don't mind more downside, but from an Elliott wave point of view, this structure counts. It's just a stupid count. It doesn't really count like a high probability wave E triangle type of stuff. And then I haven't even spoke really about this structure down as well. But anyway, so the 618 for a double zigzag is not ideal. Now, one thing I keep in mind, so just with regards to support, is that we have the golden pocket and the previous all-time high just below price, and these are untouched. So I do not mind seeing a little bit of downside, but if it happens in a WXY, I'm not so sure about that. Not so sure. It's not really something that for me shouts the highest probabilities, because so many people are looking at a WXY, it starts to be a little bit awkward to talk about a WXY, as the whole world now online seems to be talking about a WXY. And then I'm like, well, if I'm a market maker, don't I maybe try to want to push price up instead? Make people FOMO thinking the low is in and wave Y never comes, and then bring it back down? Does that sound interesting from a psychology and market maker point of view and grabbing some liquidity, yeah, that sounds interesting. If I can fill my bags with my positions, drag it to the other side, get out of my positions at liquidity, and then drag it back down, that would be very interesting indeed. Now, we do have some support, of course, then down here, 72.69.5 from the low to the high is the golden pocket in confluence with the support resistance area. And below that, we have a target box at 68K. We are currently at support, but below this still 67.7, 68.9, right? Okay, so let's then talk about the other scenarios. 70K. Okay, so we have some more support. Yeah, it's a nice area of support, the golden pocket, the support resistance area. But let's now talk about some other stuff in a bit more detail. And this is not covered in the video. I gotta be honest with you guys. I really struggled making a video today because I was like, what am I gonna talk about? Like, we were looking for 81, looking for a move up. Over the weekend, when I am off the charts doing other stuff, we moved towards the downside. Very nice. And now we're down here, and I was like, "Jeez, like, am I gonna, It took hours. It took me hours to make that video, and in the end, it's 6 minutes. Anyway, now we can talk in more detail. So, the 618 is touched. It opens up the door for a few other scenarios, okay? And I will explain what to look out for. I will explain my approach. It will be a little different than the previous video. But let me at least explain what the scenarios are and how you know if they have high or low probabilities. So, we have a diagonal on my chart. This is a bigger 5-wave structure. And here we have 1, 2, 3, 4, and then wave 5, okay? Now, after a wave 3, you preferably see price move up to touch the 618. So, arguably, you can put wave 3 at the low there. And then look for a zigzag family structure in 4, either a simple, double, or triple zigzag, right? And then another move down to take out the low. Wave 5 touches the golden pocket and possibly dips just below the golden pocket to touch 68K. Interesting. Clean it up. Okay. So, in this scenario, your wave 1 is then finished as a zigzag family structure. So is wave 2. Wave 3 is counted as a double zigzag, a WXY. So you have ABC, corrective structure, A, 5-wave structure, right? In a triangle, this has to be a zigzag. But here, this would be a diagonal in a 1, 1, 2, and then you count 3, 4, 5. And then this structure is corrective. W, X, and a Y. And then you look for the move down. 1, 2, 3, 4, 5. That's your C. A, B, C. Okay. And then we touch the 618. Again, diagonals are possible. It's just too early to talk about diagonals locally to the downside. Huh? So preferably you put your wave 3 at the low. And then you get a little bit of a structure to the upside in a wave 4. Now, after wave 4, you then look still for another move down in a wave 5 to take out the low, touch the support. Resistance to the upside, all right, let me put on all my levels so you can actually see it, is this blue box. All right, so where we found resistance now over here is quite simply support resistance flip, right? Not very exciting per se, but a little bit higher. We have a weekly naked point of control of last week, a daily as well. So 83.5K is very interesting. Then we have a couple of levels above, but I would value them less compared to the weekly naked point of control, 83.5. So that is why in my drawing, I put the 4 on the weekly naked point of control. So, the drawing itself, the design of a scenario is not made at random. It's basically designed based on the boxes and support and resistance. And then get a 5 down. Of course, there is the opportunity for this wave 4 to fail and price to continue, but that's other scenarios that are coming up. So this is diagonal 1. The vertical line is a fib time comparing wave 1 with wave 3 in time. And it's nice if wave 3 is at least quite similar compared to 1. Wave 2 is incredibly short, has to be said. Wave 2 is very, very short. But 1 and 3 are the downwards moves, right? They're in the same direction. It's nice if they are at least a little bit related. I could move wave 3 to the left, 4 to the left. Oops. 4 to the left as well. And then 5 to the left. And from a theory standpoint, this is a perfectly fine structure then. You have a 3 wave in 1, in 2, in 3, in 4, and then eventually in your 5. It's just that time-wise, your wave 3 is super short compared to 1, which impacts the probabilities negatively, right? But it's not like there's a significant problem with the structure. It's just that the ratios are a little bit off, right? 3 is very short compared to 1, right? So yeah, that's just something that I have in my mind. But that is why I have a dotted line here. If a low is made and we get an impulse up, correction, there is the potential for continuation, or at least a 1, 2, 1, 2, and maybe then you continue up. But there's the potential to break 83 and move to higher prices. But that depends on an impulse on the very low time frames, which means that this should be an impulse. And as I posted in the silver updates, it's a membership, with in between like updates and whatnot, right? We got to wait if this turns into a 5 or a 3. At the moment, this of course looks very 3 wavy, not 5. 1, 2, 3, 4, 5, right? Well, a 5 wave, 1, 2, 3, 4, 5 does not really work anymore locally because of the overlap between this low. Let me put this on the chart. Where's the horizontal actually? There we go. So you can see here, let me zoom in, that low here touched this high, which means that if this is 1, 2, 3, 4, 5, your wave 1, this is your wave 2. If you want to count 3, 4, 5, wave 4 now overlaps with wave 1, which invalidates an impulse. Now that automatically means that your bullish count is going to be a double 1, 2 or a diagonal, because we can't really count an impulse anymore. So your bullish is 1, 2, 1, 2, and then a 3. Alternatively, there you go again. 1, 2, 3, 4, 5. So it takes a bit of time. Now, what I mentioned, my approach, my trading approach from an Elliott wave point of view is to wait for a 5 wave impulse and then long the correction, right? 5 wave impulse and then long a corrective structure. Or by now, 5 wave impulse, 1, 2, 1, 2, 3, 4, 5, 4, 5, correction. And that's interesting, right? As long as we get like a 3 wavy mess, right? Or at least even a potential diagonal, right? It's not interesting. It's not for me. I'm not saying it's not interesting to you, of course. But for me, I wanna have good setups. I want to try to grab the 3s, of course. Try to grab the reversals. So it's a perfectly fine diagonal, but because of time, I'm still considering this. Plus, I do actually favor, not gonna lie, I do favor more downside still to come at a later stage and take out this low, touch the golden pocket, maybe even touch 68K, right? But I can't say that I feel really great about a WXY. I don't know, like it almost starts to become a cult by now, like the WXY cult. It's almost like the ICT gang that we had in the past. Everyone looks at this thing, everyone defends this scenario, like everyone defends the triangle, like, you know, like, but we gotta think about other stuff as well, right? So this is one of those other scenarios. And what we want to see in wave 4 is a zigzag family structure, which, by the way, can of course still be a WXY as well, right? ABC, correction, ABC, 4 down, We got to give it a little bit of time. Got to give it a little bit of time. We're not going to have clarity probably by the end of this night if we look for a 4. Okay, something to keep in mind. Next. So this is a double zigzag, but it's different compared to your traditional WXY you see all across the internet. So here, your W is the same, your X is different. It's not a triangle. It's counted as a running flat, right? Running flats are the rarest flat structure, right? Gotta say, in that case, a diagonal, wave A. And then you have a zigzag B, and you need a 5-wave C, which means couple of 1-2s, and then poof. Take out the high of A, 88.8K. Finish wave C, possibly at 93K to 95K, which explains the thumbnail, because 83 is resistance and 93 is resistance. Right? And then you look for price to move down in a zigzag Y. Now, this is when we think about psychology, like in a market maker position. I'm always interested to think from a market maker perspective. It's interesting. From a market maker's perspective, even though we have a running flat in A, which is a little bit sucky because a running flat it's just not it's not the highest probability flat. It's the lowest probability flat, but they do appear. But it makes perfect sense from a psychology point of view to move up, right? A lot of fear in the market, right? Low, new low, grab liquidity, maybe hit the golden pocket, whatever. And then drag it up. Drag it up. Get a wave C in, which looks very fast and impulsive. And people are like, oh, there we go. Hit the resistance and then drag it back down. Liquidate everyone again, grab the liquidity, move to 65, 60, like support over here. The wave wide targets are going to be a little different. Let's see what the target is going to be. 1 second. If we would move up to 93, the target is going to be... I actually don't have prices activated here. Okay, so, common target, 62 to 54 in that case. And if price would move to 96, it is 65 to 57-ish, which... would be very interesting, of course. Dip down into the 50s after reaching 95. How about that? That would be a drop. Now, for this to happen, of course, we need to count this as a multi 1-2 or get a diagonal locally. Double 1-2 is easy because you get a very impulsive wave 3, and then you look for 4, 5, 4, 5. The diagonal will take some time, right? So diagonal retracement, and then you look for price to move up. Okay. So that is the second scenario. For me, this is the most interesting one from a psychology perspective. It's not necessarily from an Elliott wave perspective, but from a psychology one, it's interesting. From an Elliott wave point of view, running flat in A. Little bit. And then finally, most bullish scenario, WXY finished and you go up. The moment WXY is finished, you look for the high to be taken. With any WXY, you always would look for price to take out the high, or at a bare minimum, hit the 0.9 Fibonacci, which is sitting at 105.8K as a minimum target when a WXY finishes. For me, this, by the way, is not the highest probability scenario, just to get that one in there. Reason is time. If you compare your wave W with your wave Y, then you can see that wave Y finished before this vertical line, which is the Fib time, comparing W with Y, which it's very rare for wave Y to finish before the 302 compared to W. Does not really make sense. It doesn't really have a good ratio between the W and the Y. So that is why the other scenarios are a bit more interesting, but most of these scenarios still look for another low to be made, which is then also my, I suppose, bias. I have no problem trading long, I have no problem trading long. If I get a setup, I'll trade the setup, yeah? And if price continues, it continues. So these are the scenarios I look for. So what's my approach, right? I wrote a little bit about my approach in for the video because I got some questions about, what do you look for? Now, this is not using other tools purely from an Elliott wave point of view, and some of the things in here are not really covered. First of all, we are at 76K support. So I don't trade during the weekend. Generally, I do other stuff. So when I, Monday morning, sit back behind the chart, price is here. Well, we weren't here anymore. So price was down here. And even if we are looking for, maybe looking for an impulse, like a 1, 2, 3, 4, 5, and probably a couple of 1, 2s, get your 3, couple of 4, 5s. I don't really have interest in trading 4, 5s on a lower time frame because the moves are small. There's not a big RR gain unless a wave 4 is very clear and a corrective structure locally for a wave 4 is very clear. I'm happy to go short, but we are on top of support. There was no sign of wave 4 here. I'm not interested in going short at support without clear force looking for a 5 down. So I'm not involved during the weekend. Big move also already happened. Of course, you want to catch a move like this during the week in my case. So patient. And now we hit the 618, which means that I'm not even looking at a wave 4 anymore. I would count it differently now. Which also, therefore, this wave 2, or this point number 2 doesn't really make sense. Wait for 4 5s to form. Because wave 4 is invalidated. Now, if we get a diagonal down though, right? 1, 2, 3, 4, 5. If this happens and we get some nice overlap, right? Move down, we have the move up, get a move down, another move up with overlap here, right? Then it becomes very interesting to, of course, long support and look for an opportunity at 68K. Look for an opportunity at the golden pocket, taking from 49 to 108, right? Which is 72K to 69.5K. But at the moment, we didn't take out the local low. So you would need to take out this one a couple of times. And then we have number 3, get an impulse up to invalidate wave 4s and wait for a 3-wave retracement. So that is, of course, something I'm interested in. We touched the 0.618, right? And we, at the moment, only have a 3-wave structure up, not an impulse structure up. And the only way to count this impulsive now is either a diagonal or a multi 1-2. And yeah. So because it's a 3-wave structure, I don't want to be part of it just yet, right? It's a 3-wave, not a 5-wave. 3-wave equals lows, right? It's not really very bullish yet, unless we have a double 1-2. But let me actually check for a double 1-2 here. Yeah, so if price is going to take out this low, or actually these 2 lows again, the probabilities for a double 1-2 will also go down as we are now approaching a 5 fib time, meaning that your second 2 is going to be 5 times longer than your second wave 1, which is not ideal. So the moment you take out these lows, the 1-2-1-2 would lower in probability, and probabilities increase for possibly a WXY if you do go up, a diagonal if you do go up, and alternatively ABC, and you just trickle down and take out that low. So I'm just not interested yet, is what I'm saying, right? From an Elliott wave point of view, looking for a new position on the 15-minute. There was an opportunity, of course, right, with an impulse correction. But yeah. So I guess in all of the talking, you kind of get what I'm looking for and what the, what the probabilities are. But we covered these scenarios. Let's now do this and then wrap things up. So 1 second. We do this, we do this, we do that, and we do that. So we have a move to the downside since all-time high. And when people are just really starting into Elliott waves, right? How do you count this structure down and get to probabilities? Huh? I should actually do... Okay. So, because if we count this structure to the downside as a higher probability corrective structure, you look for price to take out all-time high later. You can dip, like same with the bear market, no problem. Eventually you look for price to move up. Anyway, zigzag, flat, triangle, WXY. Those are your corrective structures. Of course, some of the stuff has been covered, but we have this move to the downside at the moment. And let's go through them one by one. Can we count a sideways WXY? Then we need a W, we need an X, and we need a wave Y. A sideways WXY is not a sharp WXY. Can we count this as a sideways WXY? Not at the moment. Wave W has to be a flat or a zigzag. In this case, it has to be a zigzag. That's your W. You want wave X to retrace wave W by at least the golden pocket for a sideways WXY. That would be like minimum generally is 05. 382 would be absolutely like we don't like to see the 382 really. 05, but golden pocket or higher is most common for a sideways X in a WXY. Well, we didn't. Oh wait, we did hit the golden pocket or the 0.5. Not the golden pocket. We hit the 0.5, but putting a wave X there, right? Well, if that's the end of a wave X, we need a Y, and Y has to then be either a flat or a triangle. A, B, C, D, we took out the low, invalidated. So that does not work, which therefore means in a sideways WXY, you would need to look for a higher X and another wave Y. You can start to see the problem with this. It's a low probability at the moment, right? Unless, 1 second, you get this. But then you need an impulse off the low, which is a 112. Right? So this is how we can get to such a scenario. And if price retraces high enough, let's say an 05, golden pocket, there is at least the potential that you never get a wave Y down to into the low 60s or 50s. Right? The higher wave X goes, the lower the probabilities for wave Y to be a zigzag. If wave X can touch the 0.7 Fibonacci, probability significantly decrease. But hey, we're far away from those levels at the moment. Oop. Oh shit, I removed my box. Oh, there we go. Okay, sideways WXY? No, not yet. Preferably we hit the 07. We haven't been there yet. Then we get to a triangle. I actually got questions about this in the beginning, like looking for A, B, C, D, E. I've never really considered a triangle from this high. It's too early, right? If this is A, you need B, C, D, E, or some. It doesn't work. So triangle, and triangles are not that common, right? Generally, people like to pull two trend lines and be like, "Oh, they're converging. It must be a triangle." But you got to think about a WXY, about a running flat as well. Bring us to flats. A, B, C doesn't work. We never took out the all-time high. The only way we can count a flat would be A, B, and all of this is a wave C in a ending diagonal. Well, we spoke about this diagonal, and then a move to the upside, we will know more. If the move up is very impulsive, look for all-time high. If it is corrective, we look for the low. We will be able to figure that one out. In both cases, you look for a bounce to the upside, right? And then we have the zigzags. So from the corrective point of view. And the zigzag is a 535. Double zigzag is another X. And then another 535. And a triple zigzag is another X and another 535. Now a triple zigzag, WXY, XZ, is very rare. I have seen GZ in Discord count at least the potential of W, X, Y, X, and then look for Z. Nothing wrong with the count. It's just probability-wise, WXYs tend to have lower probabilities, right? And all of the waves, at least, W, Y, and Z should be zigzag family structures. So is it a possibility? Yeah, it's a possibility. High probability? Generally not high probability, which then brings us to the WXY that everyone and their grandma is looking for at the moment, which is this. And in this WXY, X finish, you need a Y down, A, B, C. But in wave A, wave 4, touch the 0.618 as explained at the beginning of the analysis. All right. So People end their triangle there as a wave X, and then they want to count 1, 2, 3, 4, 5. Oops. Wave 4 touched the 0.618, taken from 2 to the low of 3. It's a Fibonacci. Right, Fibonacci had taken up. And there we go. So that one. And the 618 invalidates a wave 4. So if you have a triangle in X and you want to start a wave A to the downside for a bigger wave Y, right, in the double zigzag, just for the context, this is what you're looking for, right? This is your target. You are looking for wave A here. Wave A has to be a 5-wave structure. 1, 2, 3, 4, 5. The ones that count a triangle here, finishing at this top, cannot count this as a wave A anymore unless it becomes a diagonal. Because wave 4 is invalidated. And you never got a wave 4. 1, 2, 3, this cannot be 4 anymore, 5. If you take out this low, it's something else. We're looking for a different structure, but not an impulse. At the moment, this move up is a 3-wave structure, right? Which increases probabilities to take the low, unless it becomes a double 1, 2, or a diagonal. Again, just to notify, in case it happens, if price takes out this low, right, probabilities increase. This is a 3-wave. In other words, A, B, C. And therefore, impulse doesn't work because of overlap, as explained. So that impulsive scenario is out. Multi 1, 2, low probabilities if you take out this low at 77.5, lowest probability bulls. And the only scenario that's left would be a diagonal, but it's too early to talk diagonals. In other words, take out this low, probabilities increase to take out the next low, which can still lead, by the way, to this. WXY. A, B, C, and W get a corrective structure in a wave X, and then another A, B, C in a wave Y. And guess what? A WXY to the upside can be part of a wave 4 in a diagonal over there. But still, if this is corrective, you look for price to take out the low. That's the message. That's maybe my fault. I love detail. Sometimes I go too detailed, and if I go too detailed, Anyway, corrective move up, take out 77.5K. Probabilities increase to take out this low. That's it, basically. Unless it transfers into a diagonal structure. But we will have a lot of time to figure out if we get a diagonal structure, right? If we go up, first scenario, this is how probabilities change, by the way. It's quite interesting. So you then have ABC. If you take out this low, you would count ABC highest probability. If you then go back up, your first scenario is going to be WXY double zigzag, as long as wave X does not touch the 0.7 Fibonacci, taken from the start to the end of W. And then you have your wave Y, which has to be a zigzag. And only after, if you come back down and up again in zigzag structures, are you going to count a diagonal as a highest probability. So it will take a while, right? Yeah. So in other words, I am not interested in buying here. Right? Quick move up. It's a little bit cheeky, I gotta say. Like it goes up so quick, you're like, okay, what's the chance of continuation? So yeah, take out this low. Probabilities for a double 1-2 decrease because of time. Right, your second wave 2 compared to your second wave 1 is over 4 times longer, which starts to reduce probabilities, right? 4 is like basically a little bit like a cutoff. That's where probabilities start to decrease. Touching 5, touching 6, and still making new lows. Yeah, not really looking for a double 1-2. Your only bullish scenario left is going to be a diagonal. Probability is higher to take out the low unless you have a diagonal. Okay. We were talking about the zigzags. Okay. So double zigzag, little bit tricky because of price touching the 618. If you have your wave X on this high, you would like to see a diagonal now. 1, 2, 3, 4, 5. That's your wave A. Onto the golden pocket, maybe 68K. Then get your wave B, 3-wave corrective structure, and then preferably a very quick, high volume, scary wave C. Poof. Very fast. Into support. And just to open the levels again, which I didn't do in my video. Very messy. Wait, let me do this, and let me do, where is it? Let me do that. So, okay, wait. Give me 1 second here. I'll make it a little bit more clear. Let's only focus on these two. These two are the most important ones. So, 62.2, 57.9. Those are two very interesting levels. These are high time frame point of controls, right? Now, if I open dailies, you can see they are surrounded by some more support. 61.8 daily naked point of control, 56.850 daily naked point of control. So again, close to one another. So those are like areas, which is why I have my target boxes of interest. And then I want to see wave C. And when wave C is finished, I do not snipe the low unless we get a nice 5-wave structure that is easy to read. Then I'm happy to long it. But C's can be very fast, very scary, and on a high amount of volume. So generally, I wait for a 5, 3, and then that's my long. And after a WXY, right, when Y is finished, you look for all-time highs. So it can provide a great risk-to-reward ratio setup. It's just going to take a while. Right? It's just going to take a while, especially because price here touched the 618. So a double zigzag to the downside at the moment just doesn't look very pretty. No. Unless you put your wave X here, which means you have a triangle A, B, C, D, E, and then your wave E by itself is a triangle, which is allowed, but it's so rare. I've never seen it in my counting career. So I don't like to put that as a preferred scenario. Okay. Zigzag, yeah, simple zigzag doesn't work. Double zigzag is covered, triple is covered, flat covered, triangle covered, sideways WXY covered, impulse. Impulsive structures, the only one here that works is the diagonal because of overlap. Multi 1-2 actually still works, but low probabilities. I'll explain why. So an impulse would be 1, 2, 3, 4, 5, but 1 and 4, right? The bounds here, they overlap, which isn't allowed. So you have to look into diagonals or multi 1-2. The most bearish scenario that you would be able to put on a chart right now is this, right? If you're looking for 1 second here, gotta up. If you're looking for 15K is next, then this would be you, and then I'll just show you why the probabilities at the moment are not highest, but it's not invalidated here. Interesting. So multi 1-2, right? Expanding diagonal in your first one. Then you have 2, second 1, second 2, 1, 2, and you need a 3 down. But this 3 has to be the most crazy, insane drop. Very fast, very high volume, right? And at the moment, you can see volume is declining, not increasing. So that's one. The second reason is your blue wave 1 is longer in price than your green wave 1, which is not ideal, not an invalidation, but preferably your lower degree 1 and 2 are shorter in time and price because they are a lower degree. And your second wave 2 is longer in time than your first wave 2. So, yeah. Doesn't have the highest probabilities. Probabilities are higher that if you want to be bearish, you would need to count this as a leading diagonal, so not part of a flat ABC. This is a leading diagonal, and then you look for that. And this is then either a 3 or a C. Can't deny, it would be very interesting to have an A, B, C, and then move up. People become very bullish. This would make me think, by the way, of what we had here. I'm chatting a lot, eh? Welcome to my TED Talk. There we go. 886 was touch. Oh, wait. I have a template for that one. There we go. Makes me think a little bit like of something we see here. No? Low, another low, another low. 5-wave move up. Remember what I said with what I'm looking for in my approach? The easiest trade, in my opinion, in most of this range was this one. Right, so wherever you want to put your stop, the low is the invalidation. But longing here, that one was the easiest. Low on support, by the way, we had a box. Clear 5-wave up, 3-wave down. That's your long area. Minimum target, take out the high with the potential of continuation. But what we have now reminds me a little bit of that. So your bearish scenario becomes this diagonal. This is how you go through different Elliott wave scenarios and get to the ones that work and the ones that don't, which then leaves you with what I have here on the charts. Ethereum, by the way, is hanging into support. I made a video on Ethereum. For the ones that want to see Ethereum, just go to altcoin, and then there it is. So you can check out this video. Probabilities played out, by the way. Ethereum was easy. We touched the 886 on Ethereum. Ethereum had a bounce, came back down, touched the 886, had another bounce, took out the low, which happened with this drop. So Ethereum was easy. Yeah. Okay. Any other things I want to add to all the talking that I've done in the past 50 minutes? No, I think what I want to end with, I think that this makes most sense. I want to end what do I want to end with? I want to end with the polylines. Let me just put some polylines, make a folder with the polylines. Let's do this quick. Because I want to talk about that one. I want to talk about probabilities. Okay. So what you see on the chart right now is a summary of the 4 scenarios I have here. Both higher and lower probability scenarios, but basically the general consensus, what you're looking for here, is that the probabilities are highest. You're not yet finished. The only way to be finished would be for this move. So impulse up, correction down, and it's no problem to miss the move up. This is the best long opportunity. Not catching the low, catching the highest probability move, which is here. It's this long. 5-wave up, wait for the 3-wave down. Remember what I said over here, right? Similar. 5-wave up, 3-wave down. That's the best opportunity. This is the riskier one. You get a better RR, but it has higher risk. this is the easiest one. Right? That's the highest probability one. Right? Sometimes you got to just wait for A setups, or some people call it A plus setups. But other than that, you can see basically up, low, right? This is your diagonal, preferably would still take the low. And in a WXY double zigzag, you also still preferably take out the low. I explained that just to summarize now, this WXY is probably the most popular scenario online. I had a little peek on Twitter the other day, just scrolling through some crypto-related stuff, which it's very uncommon for me to... I like Formula One and other stuff. My timeline is full of Formula One things. But I decided to have a look at what people are thinking during the weekend. And yeah, the double zigzag is definitely a popular choice. But it remains one that I think is too obvious. I also think we would still go lower. But is it going to be a WXY? Maybe. Maybe. I don't mind counting it. The issue, again, for the WXY now is price here touched the 618, taken from this high to the low. Wave 4 is therefore invalidated, which means your wave A, if A, is going to be a diagonal. Mind you, wave A has to be then a diagonal. If your wave X is a triangle. So you cannot count this as a 1, 2, 3, 4, 5. Alternatively, absolutely most bearish is 1, 2, 1, 2 down. But your second wave 1 is quite a bit longer than your first wave 1. So do we have bearish CVD? Oh, we took the low, by the way. Okay. Probability is higher now to take out this low at a later stage. Your quote-unquote bullish scenario would now be a diagonal up, which is way too early to call. Alternatively, WXY, and then go back down to take the low. Just want to say that. So, yeah, of course, most bearish is 1, 2, 1, 2, and then you just fountain down. But if that happens, then we pick up the WXY again as having some solid probabilities. Would be quite deep. 1, 2, 1, 2. You then need a 3, 4, 5, 4, 5. That's only A. You still need B and need C. I don't know. Unless we get a double 1, 2 here, I don't really like the WXY. Oh. Okay. One that I do definitely keep a sharp eye on is the diagonal. So locally, this move has a higher probability now to be corrective, right, on the 15-minute time frame, which is very interesting because 4 has to be a corrective structure, WXY, and then come back down to take out the low, right? I'll repeat, we have some interesting support, which is untouched. We did not touch the previous all-time high, neither did we touch the golden pocket from the low to the all-time high, right? Which would be interesting to touch. And just below the golden pocket is the 68K box. So that's why on the thumbnail, wait, I didn't include it on this thumbnail, it's the old one. On the my previous idea was to put 72K to 68K below the arrow instead of the word support, which had to do with the 618 and the 68K box, basically. Okay. The flat is the most interesting from a psychology point of view. The problem is local price action. Wave C has to be an impulse. Wave A is a running flat, which by itself, of course, a little awkward. But you need a double 1, 2 to get your wave C or a diagonal. Now, if I just take a fib time, right? So a double 1, 2 for the ones that just came in. Double 1, 2 would be this. And then you have this. Right? Invalidation, of course, taking out the low. And the moment you touch the 886, that's a big problem. And your wave 2 now is over 4 times the size of your wave 1, which now starts to lower probabilities. You can see that price took out these the double bottom here. But this low is now made after a 4 fib time taken from the start to the end of the second one, meaning you compare the move up with the move down. It's very uncommon for 2s to end after a 4 fib time. It's very long for a wave 2. Right? So this reduces probabilities for a multi 1-2. It's all probabilities. Now, because it reduces probabilities for a multi 1-2 and an impulse is not possible because of the overlap, the only bullish scenario that would, like, it's double 1-2 is not invalidated, but it's just low probabilities, but it kind of leaves you with a diagonal. 1, 2, 3, 4, 5, correction, continuation. But the diagonal is too early to call and talk about diagonals. So in that case, before a diagonal, you always first count a W, wave X, right, on support, and then ABC, wave Y. Resistance, 83. This box is your resistance in that case. And then after wave Y, you look for price to move down and take out this low. Only if this turns into a zigzag again and you take the high once more, are you going to count this as a diagonal. And then down and then up. Long opportunity. This is how probabilities change depending on new information locally coming in. Right? We now observe taking the low. Probabilities go down for a multi 1-2. Why? Time. Wave 2 is over 4 times longer than wave 1. It reduces probabilities. It's not an invalidation, but it reduces probabilities. So that means probabilities are higher to take the low. If we do move up, take out this high, the first thought is going to be a WXY double zigzag, as long as you don't touch the 0.7 Fibonacci. 76.4. Because it reduces probabilities for a WXY double zigzag. So if you touch the 0.7 and then move up, well, we might start thinking about diagonals, but yeah, you know, up. Yep. Okay. So on the daily time frame, as per the summary, probabilities remain higher to take the low. Probabilities locally are higher. It's corrective, not impulsive, right? Multi 1-2, lower probabilities. Diagonal, too early. If you move up, think about a WXY as long as you don't touch the 0.7. Yeah, you know, at the moment, still higher to take out the low. If you do shoot up, right? So I'm not interested there. If we would move up with a double 1-2, low probabilities at the moment. But if you do shoot up, corrective move down, this is a great opportunity, right? No care about missing this move up. You know, there's many opportunities in the market. This is a great opportunity, but at the moment, lower probabilities for such a big move because of the nature of the local market structure, which would suit more with, let's say, a diagonal, right? But yeah, you can see this white one takes the low, green takes the low, up, down takes the low. Did I miss any alpha? What's up, man? So, yeah. Not a big fan of the WXY with the 618 touch. Potential for a diagonal in an A or a multi 1-2 in an A. In both cases, probabilities play out because you take the low. But just because price touched the 618, it's a bit awkward for this scenario. And the diagonal doesn't look too bad. Just diagonal grind a bit further down into the golden pocket, support resistance with 73K, 68K support as well. Yeah. Interesting. So yeah, that's my thoughts, I suppose. So those are the levels, right? it says on the thumbnail, watch these levels. Those are the levels. Currently at 76k support, which is where we are now, but I think a little lower. There's some nicer stuff. You only missed the supercar giveaway. That's true. We did that one on Instagram. Yep. Okay, let me check chat here before I have to head off. So, what are your thoughts, guys? What do you have? What is your account? I always say in Discord and stuff as well is we're basically all one big team. That's why if you don't know, that's why it's called team. 1 second here, let me show this. That's why in Discord, whenever I post, I always tag the team role. You can sign up for the team role and you get the role, and then you get notifications when I post in Discord. But we're all like a team. I just happen to be the guy that makes videos. I love sharing and teaching. But let's see what you guys think. Might be a 1-2-1-2 over 3. Yes, that is correct. That would be wave 3 of wave A. In that case, your wave A is going to be, of course, very deep because this is 1-2-1-2 3, which generally, of course, is a big move on the highest amount of volume as well. And then you still need 4-5-4-5. Right? Let's put in let's have a little look from a measurement point of view. So that's this wave 3. So that's at least 72. Oh. However, of course, this is your second wave 1. 64. So, area. You still need a 4-5-4-5. That's your A. Get a 3 wave in your B. And then a 5 wave in C. Definitely interesting. Definitely interesting. Your second wave 1 is a bit longer than the first one here. But it's not an invalidation. So again, probabilities are higher to take out this low. Because this doesn't count as an impulse overlap, and a multi-1-2 has now low probabilities because of the time this wave 2 took against this wave 1. At the moment, this counts better as a zigzag, which can give, right, if you don't just drop it, W, X, another zigzag up, A, B, C, wave Y. Bullish alternative, bigger diagonal, but it's too early. So it's bearish, still proven otherwise. Yeah. So multi-1-2 is definitely a possibility. In that case, you're gonna nicely go down for the lower ends of the wave Y target in that case. Right? But so many people look at the WXY, it makes you think twice. What's up, you sport? Yeah, it's much more. The diagonal is very shallow, so that one is not really a problem, right? Like touch the golden pocket, it's fine. But yeah, the wave Y in a double zigzag is very far down. Yeah, yeah. If you have a relief first, absolutely possible. What's up, Legendario? By the way, Mark, maybe a band-aid. How you doing, everyone? What's up? Would you say SUI has done a local 5 structure? From the low, the higher low, yes. I covered SUI in the previous altcoin live stream, which you can find. Wait, which one was it? Oh, wait, it's in the Bitcoin playlist, I think. Yeah, this one. Here, SUI. Because we were doing some other stuff waiting for the news. Yeah. But yeah, it also shows, by the way, I am interested in looking for of course, short, like looking for the low, but I do start to get triggered and looking for long opportunities as well. If the opportunity is there, I'll be in. Yeah, I'll be in. If there's a short opportunity, I'll also be in. But we start to reach some some key areas of support. So we've of course already had quite a solid retracement. And yes, in the meantime, we had some moves up. But I don't mind. I mean, diagonal, you first go up a little bit. Flat, you go up a lot further. WXY is that's you go down, and only then later do you get the bounce. Like this range was great trading, but now I'm very, very patient. Very patient. So this range was very, very accurate. We got to move down, we got to move up, we got to move up here. Here I was asleep and I was not home. So, patient, chilling, streaming. What's up, David? What's up? There's Elliott wave rule update coming. If Kuhn travels, probabilities for a dump increase. What's up, Media Movie? Yeah, whenever I travel, price tends to be volatile. That is true. I don't know why. Cheers, Albert. I don't know. I don't really have a travel planned in the... Well, that's not true. I do have a travel plan, but it's only in 3 weeks. I have to go to Dubai. And I'll be in Dubai for 1 day. It's going to be very short. It's going to be in and out. Yep. Mark. Maybe. No. It's possible. Check. Close my short from 95 and 88. Now we wait and see. Good job, obese boss. Congrats on the profits, right? If you enter a position and the chart moves in your direction, you got to treat yourself. You got to take some out or close a position and be happy with what you got, no? So it's perfectly fine to close and wait for a new opportunity. Right. It's nice to sit back, let the chart do some work, see what happens. Do you get a double 1-2 impulse up, right? Even though we took out the low, right? But still, do you get a WXY and an impulse down, corrective move up and back down, short, stop loss, bloop, right? It's nice to be patient, wait for some high probability setups. High probability, like in the range, the most recent one was this short and this long. Those were high probability. I mean, I covered them in the content. And also this one, by the way, take 81K and look for a bounce. That was covered even on the... Well, the polylines were on the thumbnail, at least. So, and now, yeah, there's not yet a great setup for me, got to be honest. So, it's not, I don't want to short here, because we had quite a move down. We're very close to areas of support that are quite big. All right, so yeah, we have 76, but we have the golden pocket just below. We have 68 just below. I don't know. The RR for me doesn't really add up. I need more information for a bit of a solid RR. If price would move up to 83, right, that would be good. And then reject, right? Impulse correction. That's where that would be my opportunity. Like that would be one that I would be then willing to take. Right, minimum target is taking out the low, just in case you get a diagonal, right? And with the potential of falling further into the golden pocket and 68. That's one that I would be interested in, but I need to wait. It's not going to be today, so it's going to be later this week, if anything. If you move above resistance, and if you would continue, then my next short would just be up here from a short perspective. For longs, currently the probabilities are not really on my side, because we took out the low. Wave 2 would be very big. Discounts better as ABC now compared to double 1-2. I don't mind price moving up. It's just not yet great probabilities. It's an impulse. It would be more like a double zigzag, WXY. And, And I don't really want to long in the middle of a potential WXY, but it can also be ABC, and we're just building bearish market structure and just move down. There's no high probability Elliott wave low time frame thing going on for me there. Yeah. No. I need to wait. If we go alt season is, I mean, it's an interesting question. I think your bull market is going to struggle. So we have a retracement, and so far the retracement, of course, is very corrective in 3-wave and zigzag type of structures. Maybe you can count a diagonal, but if you lose the 49K low, welcome to the bear market, right? But there's still an opportunity of extended 5s or higher degree wave 4s on higher time frame. I haven't actually looked at the higher time frame recently. Should actually recount it maybe. But yeah. It also doesn't really matter bull market or bear. We put a short online recently. Let me find this one for you, where I explained that you can make a lot of money in a bear market as well, right? Was it this one? Let me have a look here. Oh, wait. So this is a short we posted, I think earlier today, and I'm actually not sure if you guys can hear this when No. Okay. I need to change this. How do I? Once upon a time, I knew how to fix my mixer in OBS. Anyway, you can just check it for yourself as well. Let me just put the sound off. We have subtitles, but whoop. So basically, what I say here is this was an answer in a Q&A like we do now, and I basically talk about people on TV or like CNBC back in the day talking about super high targets, and it always happens. But then eventually, sooner or later, you get these big drops, right? Back in the day to 30, 69, 15. And if you look at like people that shout 500K, 1 million, 300K, and you first of all, do your own analysis and do your own research, of course, right? That's like the whole thing of trading. But it's not worth it to trust such numbers on news. One day you're probably gonna hit it. And then the people that 10 years ago said 300K went through 3 different bear markets, and then they're like, look, I told you so. But you know what I mean? It's not like they're talking about, this bull market, right? Back in 2021, this is the bull market bringing us to 400K, 300K, 500K, right? You'll see it on TV. Like, we're going to get there. What's I think this is the top, right? Like, etc. And then 65, 30, 69, 15. And if you trust those type of like news related thingies or people without clue talking like that, you're going to find yourself in a very difficult position if price is back at 30. You know what I mean? So now, right, is the bull market over? Yes or no? It does not really matter too much. You can make money both ways as long as you're well managed. You should also realize that we're talking about prices in this range here. We're not talking about 500K, nor are we talking about 20K. Right? The probabilities at the moment are higher. This is corrective. Increasing probabilities to still take out this high later. When will it happen? Right? Well, we'll count it. Right? If price eventually moves towards the upside, we find support, we count some impulses, we'll be able to figure it out. Right? Same over here. We got a solid retracement. We were correct on the multiple 1-2s here, right? And eventually we move out. So it's a matter of time. But if we take out the high, we take out 108K. And just by counting, we will see how far we get, right? If price takes out all-time high, we'll be able to figure out how far it goes step by step. But I'll never be talking about such high targets, right? We just follow the structure, take it range by range, as I prefer to say, because every new range will give you all the information you need. The range will tell you what to do, right? And then I explain what the highest probability in the range is. So, yeah, I'm not really talking, bull bear market. It's a little dip, but at the moment, there's no reason to think the bull market is finished, right? But it's a solid retracement. Yeah, don't get me wrong. It's a nice like 30% down, but at the moment, if you talk about bull market, bear market, take out 49K, and yeah, you'll have a problem. Yeah. So. Both scenarios, absolutely. You trade lower time frame than the 50-minute? No. 50-minute is really the lowest I go, but my favorite tradable time frames is like the 1 hour, 4 hour, from an Elliott wave point of view. Yeah. 1 hour, 4 hour are nice. It also, like, you have to be more patient, and for waves to form as well. Which just suits my way of trading, I suppose. What's up, Deon? Multi 1-2 in the daily or something. Yeah, I saw people on the stock market, also in the group, looking for WXYs or ABCs. And then A is soon to be finished or W soon to be finished, and looking for an X or a B. I spent the weekend in Cannes. And Nice, wishing to bump into you. Yo, Mugandusi, should have written me, man. Should have sent me a DM. I would have been happy to meet you, at least on Saturday. I didn't have time on Sunday. I was out in Isola 2000. I was snowboarding. But hopefully you enjoyed yourself in Cannes, Mugandusi, man. And when you're around next time, just send me a DM. What you doing in Dubai? Token 2049. So I'll be there for 1 day. Yeah, check it out. I was invited by Blovin, same as Barcelona. So Blovin was there. My main contact, Charles, he's a great guy. And we met up in Barcelona, and now I'll see him in Dubai. Bit of chatting, trying to learn a thing or two while I'm there. Have a party in the evening, and then fly back home that night. So it's going to be fun. 68 would be a really good area for bounce to retest the price cycle top. Yeah, but almost too good to be true. I know, right? Yeah, I mean, we had such a move down. It becomes more interesting to look for moves towards the upside instead of always shorting, as price has already gone so far down, which is also, of course, like a danger, right? Like price is up and up, like look how high we go. And then, you want to, or people want to try and keep longing and longing and longing, and it goes good, and then oops, not nice. I mean, this was a solid retracement still, so good long range. And if you long over here, it's a little bit of an issue. You're just below all-time high. So if you're not positioned from lower, this is not a great risk-reward ratio from an Elliott wave point of view, right? Because you can remember we were counting 1-2s, we have our 3, we're counting 4-5s. Longing into 4-5s is not great. It's not great. You want to long into your 1-2s and then exit them in your 4-5s, right? Typical impulsive structure. You want to take the bunch in the middle, right? You have your 1-2s in a bearish scenario, 1-2s, 3, 4-5s. This is where you want to try to get your entry and read the market. Impulse down, correction up. Impulse down, correction up. Impulse down, correction up. Okay, I got to enter. Bearish CVD, bearish CVD, bearish CVD. That's often what you see. Just like here, we had bullish CVD, bullish CVD, bullish CVD, right? You enter, you get to 3, and once you start ranging here, that's the exit. And then you just wait. Well, then we're done. And you can do this on any time frame, right? This happens to be the daily, right? But it's the same here. We have a move down. This is not like an impulse, right? It's not an impulse. Like this is very nice as an impulse. but it's a good move to the downside. Right? It's a solid structure to the downside. Can we go deeper? Of course, but it's been quite a move down, and yeah, I don't know. I'm not really, unless I do low time frame trading, I'm not really too interested to try and go into a swing short. You know, it's not really the place to look for a swing short. Actually, yeah, when I was younger, I did my brother practice all day. Football. What's up, NFA? How you doing, man? How are you doing? What's our time frame Elliott wave count now that we retrace this much? Also touching 6 would overlap our time frame wave 1. So would it be last level to watch out for the beginning of hell? No, I mean, arguably, of course, for some people, hell already started because they bought at 108 and now we are at 78. You know what I mean? So it's different for everyone. But the high time frame cat, I should have a look at it again. I should put some time into counting the higher time frame. Of course, we had you can if you go back to older content in the high time frame playlist on the YouTube channel, it's on the homepage. I've been talking a lot, like almost every video, every stream we did, I was talking about this, which of course is your bearish scenario, by the way. But correct or wrong, in hindsight, right? Maybe in a year's time, it doesn't really matter, because we were looking for at least a 5 to end in here. And then on the daily, we were looking for 1 2s and 4 5s. So as per the older content, the probabilities were higher to look for a drop. Maybe one more high, right? Remember, maybe one more high and then look for the drop. But looking for a drop nonetheless, because we're looking for 4 5s, right? 4 5s. So that's like your exit area. On a weekly, 1 2 3 4 5. On a daily, 1 2 3 4 5, right? You're starting to end structures. That's a good move down. However, currently this move down counts better as a corrective structure, not an impulsive structure. So therefore, one has to maybe consider to eventually move 5 up and count an extended 5, 1 2 3 4 5, right? As a subdegree. So your wave 5 is going to be your biggest structure, right? It's an idea. In validation, stake out 49K. The low. Alternatively, you have other type of... By the way, I just want to show this because this is important for the ones that want to learn channeling. This is a base channel, taken from the low to 2 to 1. What you want to see is wave 3 break out, wave 4 comes back, right? And as you can see over here, 3 break out, 4 comes back. So that's perfect. That's what a base channel, right? You want wave 3 to break out. Then you have the trend channel. You want wave 4 to break the trend channel, taken from 1 to 3 to 2. Preferably wave 4 breaks it, right? Because wave 4 tends to be bigger. We broke the trend channel and then moved up. And then we have the end one. 1 2 3 4 5, taken from 2 to 4 to 3. You could also do 1. Right, depending on how impulsive it is. So then you would have this. And you want your wave 5 to end in the upper half. Right, preferably. Midline to top line. So there was all the reason to think about, okay, psychological number hitting 100K as well. So there was definitely a lot of reason to at least consider a top to be made either soon, right, or maybe move a little bit up. But there was no reason to start buying so high. Right? Unless it's the FOMO factor, like, oh, but what if I miss it, or and now of course some people here are maybe you're here for the first time and it's like, well, in hindsight it's easy, but feel free to go back to the content we made here, and still looking for one more high and then a move down. Alternatively, the scenario was looking down. Now, do I think a bull market at the top here is now finished as a wave 5 and that's it? I would need to count the monthly again. It's been a long time since I've done, I think months now, since I've done the monthly. This is higher probability corrective. as well. So it's not... if this move down, if you go in a bear market, you want to end at least after the 17th of November 2025. It's too... Yeah. So this bear scenario, 5 is in. Bullish, just look for an extended 5. And alternatively, you're going to move into... I don't think... What's this? We didn't yet touch the 618, of course. Oh, wait. Wave 1 will be hit first, if so. Yeah, it doesn't look great, this one. What do we have here? Oh, yeah. This is your super bullish one. This one, I mean, if you follow cycle analysis, this one is low probabilities because of time. 1 2 1 2 1 2 3 4 5 4 5 4 5. This is going to take ages. It's going to take very long, unless the cycle theory is not followed anymore. You actually have a bigger one on your hands. So, yeah, I should count, maybe recount like the high time frame and make a video about it. But for now, I'm more interested in the local move down, and yeah, this played out nicely, right? If over a year, it doesn't matter if this is your end of 5 or not, because by counting it like this with a 5 wave on the daily, we were looking for this area and a move down, and that's what we got. And now we just focus on the move to the downside to figure out what's happening, right? And how far does it go, and when do we go back up? So it was some solid stuff. It was good stuff. How about putting in a low soon? Take the all-time high with a flat, and then the 1.618 for C or Y down with roughly. Tom, yeah. That's a psychology scenario. So what Tom is talking about, guys, is A, B, C. 1 second, let me prep this for you guys. I mean, wherever the low of A is, I'll just put it on the low at the moment. It's for the sake of what Tom is talking about. Expanded flat, of course, is most common. And then you look for wave C. So basically, it's that pop. And then bull market continues. Samith also posted this, I believe, in gold earlier today. Samith is a great analyst that is currently studying gun. He's very good in Elliott waves, and he's currently learning gun, which is very interesting, very complex. Okay, so see. So, this move down, right? We've been talking about the move down in the beginning of the live stream, and also the low time frame bounce that we had so far and the probabilities attached. But yes, we are of course now close to some good. Oh, let me turn log off. We are close to some high time frame support, right? Golden pocket here, support resistance area 68K just below. Right, if I put on lock, you can see the golden pocket is actually a little bit lower. But that's because of the difference between lock and linear, just, no care. But it becomes interesting to look for moves to the upside. Yes, right? That's like from a trading perspective, solid move to the downside, right? And I'm not really interested in swing shorting from where price is now. No, like I'm happy to short smaller moves. I'm not really happy to look for like bigger swings and stay in positions for weeks. It's not really the place, especially now that price locally touched the 618 taken from the high to the low as explained earlier, because it invalidates 1, 2, 3, 4, 5. You can't have wave 4 touch the 618, right? Bearish is double 1, 2. Bullish is you got a 3, maybe a diagonal. But anyway, we spoke about that earlier in the stream. So becomes, of course, more interesting to look for signs of strength. We approach areas of support. And yeah, if price takes out the all-time high, then this is always going to be your bearish scenario. If price moves up and touches the 0.9 Fibonacci, this is always going to be your bearish scenario. What is this? 105? What's this? 805. Oh, it's the same. So yeah. This is lol, there we go. This is always going to be your bearish scenario the moment you hit the 0.9. Right? This is on lock chart now. I can go off lock, a little bit different. But yeah. So Tom, you're correct, right? So if you put in a low soon, move up, take all-time high, then I mean your flat is always going to be your bearish scenario. Because the moment you take out all-time high, counting this a wave X has lower probabilities than counting a B. Counting a triangle is too early for A, B, C, D, E. So that's never going to be your highest probability. A flat is always going to be the number one bearish scenario. If not a flat, then a WXY. If not a WXY, then comes the triangle after. So, yep, very good. Wait, what did I just remove? Oh, yeah. So, no, that's good. Oh. Do you follow stocks on the private group? If people ask me questions about stocks, I'm happy to have a look. What I, of course, generally like to do is to motivate people to count a stock, to train themselves. Because, of course, in gold, it's all about feedback, shortening the learning curve, helping people to learn Elliott waves faster. And if I just analyze something, you don't learn the process. So what I generally ask is, hey, have a look at the stock. Send the chart to me. I'll give feedback and I'll have a look myself. Sometimes during either live streams or now that I also want to do more altcoin videos and maybe stocks and other markets on the channel, you'll see some individual videos maybe about stock market stuff. But yeah, I've done Ethereum a few days ago. I still want to do a video about XRP. Ethereum played out, which is nice. So Ethereum moved towards the downside, which was the goal. So that was very nice. Let's go to the weekly as I analyzed the weekly. Where is it? There we go. So the 0.618 is touched. And yeah, and now we just gotta wait. It can still dip deeper. Oops, where is it? Come on, I want to grab the wave C, mate. There we go. No problem. We have support at 1200, but generally a minimum target is the 618, which is touched. So yeah, nice. Commodities, yeah, I've done gold. It's been a few months though that I have done gold, but I don't really think anything changed on the gold chart, to be honest. Oh, I forgot which chart I analyzed. I don't know. It wasn't this one. Oh, wait, I have it here. Mm-hmm. Yeah, so I don't really think I did a whole analysis on the yearly, monthly, weekly, daily on gold, and yeah. It's still, oh yeah. So we can remove this one now. Was lower probabilities anyway. What's this? Oh, 5. Mm-hmm. That's the bearish weekly. One, two, 3, 4, 5. It's a bit short for a wave 4, this one. I don't really like that. 1, 2, 1, 2, 1, 2, 3, 4. I have a feeling we might have to move this up. And then get 4, then get 5, then get 5. Area of support important, previous range. Because then you have 1, 2, 1, 2, 3, 4, 5, 4, 5. Get another 4, another 5. Lower degree 4 here as support, potentially even as low as this one. And then you look for a final move. It's been a while since I was at gold, but the probabilities were higher to be bullish when I recorded it I mean, it's months ago. I don't even really remember. 10 months. 10 months ago since I analyzed gold. Where were we then? 10 months ago. So April, May, June. So that's June last year. So we were here in this range. Yeah. Probabilities were higher to move up as per the video. So yeah, I can redo an analysis here at some point. Oh, nice. This one goes. Yeah. Or an updated, I suppose, maybe an updated analysis. Yo, Patrick, how you doing? Enjoy the sun, eh? Enjoy the sun. Priority straight. Yeah, Patrick, everyone, he's a Dutch YouTuber. Sold everything, bought Bitcoin at like, what was it? Average 17K or something. And traveling the world since then with his family. So it's a Dutch YouTube channel. If you are Dutch or you want to learn Dutch, check it out. Here's the link. Commodities. Yep. Also an opportunity. ETH 100%. Yeah, the ETH one was nice. The analysis came at the right time, and it was a good chart. So yeah, that one was nice. Explain more about the Bitcoin scenarios. I analyzed Bitcoin starting. I actually forgot to put it in here. I should actually write like BTC Elliott wave analysis started at 7 min. Now it's basically chatting. So everything Bitcoin related was covered earlier. However, if you want a little bit of a summary, I suppose, right? A bit of a summary. Then we are here. So, where am I going to start? Okay, let's start on the daily. If we summarize the current price action, first of all, no, later. Summary, the WXY double zigzag has lowered in probabilities because locally price touched the 618 FIB to invalidate wave 4, which means if you do want price to go, this deep, you would need this to be a 1, 2, 1, 2, and then 3. However, your second one is bigger than your first one, which is not ideal. All right. So if you're looking for a wave A, then preferably you would now look for a diagonal. 1, 2, 3, 4, 5, correction, and then your second leg. A, B, C. All right. So, yeah, it's not as ideal at the moment, but it would lead to another low. Remember this. Then you have your diagonal. Wave 5, either finish there or look for 3, 4, 5, which would be nicer from a time point of view, which would still lead to another low. The reason why another low is something that is quite interesting, though, is because you're just above support, retesting the previous all-time high and the golden pocket, plus 68K just below, a blue target box. But still, like you can see, you would start to look for a move up here, right? A bounce in 4, potentially, of course, continuation. If you move 3, 4, 5. So, right, here you look for a bounce. Don't forget, if you want an A, B, B is also a bounce to the upside. Like we've gone down so much, it becomes more interesting to, from a swing perspective, look for longs instead of shorts. Locally, it's no problem to trade shorts. And here, this is WXY, also creates a bounce. But this requires a wave C, which needs a double zigzag over here. Or, a double 1, 2. Now, on a 15-minute time frame, so on the daily, probabilities would be higher still to go a bit down. Take out this low with either wave 5 or of a diagonal, or your wave Y of a WXY. But I don't know. I don't like that WXY. I gotta say, like everyone looks at that WXY with a triangle and X and bloody bloody blah. I don't really like it that everyone looks at it people count an ABC here. You can also easily count this as a 5-wave impulse. 1, 2, 3, 4, 5, right? W, X, and then you have your triangle Y, move down, A, B, C, right? You can also just finish a structure at the current low, right? Like wave 3 of a diagonal, wave 5 of a diagonal. It's more interesting to not be too bearish, I suppose. But anyway, on a 5-minute time frame, the probabilities, this is the low created, the probabilities are higher to take out this low at the moment. Reason is we cannot count an impulse here, 5, because of overlap. A multi 1-2, 1-2, 1-2 continuation up in a wave 3, lower than probabilities, not invalidated, but lower than probabilities because we took out the low here. Why does that matter? Well, if this is a 1, 2, then your wave 2, take a fib time from the start to the end of 1, double click, turn on this here. You can see that your wave 2 ended on the 1-to-1 fib time, meaning move up is the same size as the move down. Perfect. But if we do the same with the second one, right? 1, 2, 1, 2, your second 2 is very long. So your second 2 ended after the 4 fib time. Again, it's not an invalidation, but it's like it's where probabilities start changing a little bit, which increases the probabilities to count an ABC. And an ABC in a bullish scenario can only become a diagonal. But a diagonal is too early. You in a diagonal, you need a wave 1, 2, 3, 4, 5. Only when price is here do we start to give it, some probabilities really. So an ABC can still be a bigger W, X, move down, and then get a wave Y, ABC. And then you have a double zigzag, which eventually then still leads to price moving down. Resistance to the upside, which is very interesting, is 83K. 83.3 to 84K. Right? This is interesting resistance. If I would consider going short, then this is the place where I do it after I see the reaction. That's my idea. I have no interest to try and short here. I have no interest to try and short here. Right? I have interest to short here if I see an impulse down, corrective move up. Right? Let it take a little bit of time and then look for the move. At the moment, I have zero interest in shorting, even though probabilities at the moment are higher to take the low because ABC. 1 to 1, 2, low probabilities because second 2 is big. So, yeah. What about the longs? For the longs, I'm interested when we get an impulse up. Right, so 5 waves, 3 wave down, right? Opportunity. Look for price to move up. I usually like the 1 hour a bit more. So I earlier mentioned I like to trade 1 hour and 4 hour from an Elliott wave point of view. Right? But what I would then like to see is the same as on the 15. Right? Get a 5 wave up, 3 down. That's my entry. Right. So you then need 1, 2, 1, 2. You do need a double 1, 2 in this case. 1, 2, 1, 2. You get your 3, 4, 5, 4, 5. 3 wave retracement. Corrective. That's a long. If the retracement is impulsive, of course, right? 1, 2, 3, 4, 5. Corrective. I'll short. You want to, so I never really, I don't have videos about educating how to really trade Elliott waves, but that one day that will come, because actually I do have a plan about it on a separate platform. So it's an idea, very, very detailed, but it's for later. But focus on the corrective structures, right? 5 wave is generally easy to recognize, and then you want to get a corrective structure, retracement, and that's the one that you want to enter on. And at the moment, of course, locally, it's a great example, to be honest. This is 5-minute time frame stuff. It's not really my time frame, but 1, 2, 3, 4, 5, A, B, right, and then you get your C, and then you move back up. 1, 2, 3, 4, 5, corrective stuff, right, and you start pushing. Volume starts coming in. Interesting. So yeah, for longs, a bit of patience. If we do move down a bit more, touch some support to the downside, then I'm not sniping lows here. So again, I would wait for an impulse. 1, 2, 3, 4, 5, correction, entry. Not really. So here I had shorts in this range. I shorted there. Why? Diagonal. Look how long it took. We hit resistance, one of my boxes here. Once we took the low here, right, this one, I knew like, okay, now we can count a diagonal plus bearish CVDs, short. When price was down here, just above support, 1, 2, 3, 4, 5, right, after we took the low, that was the moment where, okay, we can count a finished impulse, so there's interest to look for upside. I caught the move up. Recent update, I think last Friday, take out 81K, look for a bounce. We took out 81K. Like what I say in videos is also what I trade. Like I tend to say what I look for, what the probabilities are, what the polylines, for example. There was no polyline that just like did this. All of the polylines were bouncing. Right? So yeah, that's just what I'm looking for then. But at the moment, I have no real like this was a fun range. Now patience, yeah. Do you Resbo? Well, I don't follow news obese balls. No, so fundamental stuff, not as long as it's charts like DXY, for example, I can. It's been a while since I've checked the DXY, not gonna lie. But as long as it has a chart and a price, I'll be able to analyze it, but purely technical. So there's no fundamental thought. Yeah. What's up, Mac? There are no videos again how to use. First of all, thanks for checking all the videos out. Hopefully it's helpful. And how to use fib retracement and fib trends. No, like, yeah, it's like a beginner guide, but I don't talk about the fibs because generally that's before you go into Elliott waves, the fibs are basic. Yeah, so you have of course your fib retracement, right? It's in the word, and then you have your fib extension. Okay, well, what am I going to use for this one now? Let's do that. So, actually, I think, wait, no. In the videos, I talk about how I pulled them. So in the beginner's guide, if you go to the, first video, like an impulse, same with the others. Some nice ads here. There we go. Thank you. So fib target. So here I talk about, for example, right? And then I talk about the common target area for wave 2 is the 05 to the 786, pulled from the origin of wave 1 to the end of wave 1. Right? So it's the Fibonacci retracement tool, this one here, which is pulled from, not that screen, this one, from the start of 1 to the end of 1. And then I talk about what's common. Right? Okay, then let's see where I talk about another target. This was in the Netherlands when I still lived there. Oh yeah, that's another one. Target for a wave 5. Common target for a wave 5 being the 1.236 to the 1.618 Fibonacci retracement taken from the end of wave 3 to the end of wave 4. Right? Then you have the 1-to-1, also a target taken from the start to the end of 1 to the end of 4. Right? That's a trend-based fib extension, has 3 clicks. So in all of the videos, I explain how I pulled the fibs, right? Even though the sound is off, I just mimic what I say. And you can see based on my drawing what I do, right? So, oops, over here. The 1-to-1 trend-based fib, target for 5, taken from the start of 1 to the end of 1 to the end of 4. There, that one, not to end of 4. There, yeah. And then the next one I'll show is the 0.618. It's a trend-based fib taken from the start of 1 to the end of 3 to the end of 4. And all these together give you your target area for your wave 5. So have a look in the videos, maybe like watch them again, and mainly focus on how I explain the fibs, because I explain how I pull them in the content. Is a 5-wave up a must for higher prices? If you want to really change the structure, then yes, unless you talk about a diagonal. So you want an impulse is easy, right? Let's wait 1 second. Let's go down. So imagine, right? You have market goes up, of course, in your bull market. Then you have a move down, right? Perfect. In order to change the trend and take out all-time high, you want a 5-wave move up. 3-wave correction down, giving you the opportunity to, first of all, long, and possibly look for new all-time highs. This can still be A, B, C, and then go down, but you need a 5-waver, right? Followed by a 3-wave correction, and then you look for another 5-wave to at least take out this high with the potential to continue the trend. Look for a big wave 3, right? Now, a 5-wave can also be a wave 1, wave 2. You get a lower degree wave 1, another wave 2, a lower degree wave 1, another wave 2, and then you move. Now, this should be familiar to many of you, because that is what happened here. And then boom. But it starts with a 5-wave up. 5 up, 3 down, 5 up, 3 down, 5 up, 3 down. You can change a trend with a 3-wave structure, right? A, B, C. However, you can only then talk about a diagonal. 3-wave down, 3-wave up, 3-wave down, 3-wave up. 1, 2, 3, 4, 5. Correction. So these 5 waves is a bigger wave 1 or A. Then you get a deeper correction. That's your 2. Right? And then you go pop. And then you move up. So you can change a trend with a 3-waver, but you'll look into diagonals. Other than that, you need a 5-wave. Yeah. And it's also the same with like a proper, you know, if you are in a bull market and you change to a bear market, you want to start with a 5-wave structure on a lower time frame. You want to start with a quick move down, a 5, so that you get the opportunity to then get other 5s later to get more downside. If you're on a low time frame, start with a 3. Yeah, you're gonna look for price to like take the high unless you get a bigger diagonal, right? Either expanding or contracting. So yeah, I think a nice example also is here. You got to go to a little bit lower time frame. Wait, maybe I can. Oh, I learned a trick recently. Someone told me recently, like if you use the replay tool, you can actually just instead of changing time frame and then go back, you can just put the replay to and the chart here, go to a lower time frame, and then you're immediately there. It's actually very smart. So quick move up, 5-wave structure, 3-wave down. Building mini 1-2s here with bullish CVDs, by the way. And then you get the push. Volume comes in, you break the high, that's your 3. And then you look for some 4 or 5s. So you are in a market, you go down all the time. And then here is where you're changing the structure, starting at least with a 5-waver, right? Now, of course, one can imagine people here also maybe internally count a 5, they count a 3, they count a 5, Now this is what I mentioned with ABC. Could this have been possibly a low and then change a trend? Sure. I mean, there wasn't enough for 5s, but at least what you can do as a minimum is trade it. And then you have at least the potential of looking for a 3. It's possible. But the moment you take out this high, that's your minimum target. Which means that sometimes when you trade, depending on where you put your stop loss, you might get a 1-1R, right? 1R, 2R, half R. But it doesn't matter if sometimes you have a low R trade. A win is a win anyway. But if you don't take the chance, you will also not get the potential 1 to 5R, 1 to 10R. If it would be a wave 3, you're going to kick yourself. In hindsight, it's easy. Oh, we went up and we went back down again. Oh. But at that moment in time, 5 up, 3 down. Okay, cool. Didn't work out. 1 to 1R, 1 to 2R or whatever. And then we go back down. Okay, maybe I closed it a little late over here when we move down. Cool. 1 to 1, maybe 0.7R. Who cares? You know, money. Money made. But you would not be sad or unhappy if price instead started another 1, 2, and boom, right? And then you're like, cool, 1 to 5R, 1 to 10R. So it's about taking the opportunities, and then depending on what the chart does afterwards, it's just trade management. But it's about taking that chance, taking the opportunity. Same here, by the way, right? So we have 1, 2, 3, 4, 5 wave move up, right? Sideways correction, very shallow correction. We did have bullish CVDs, but you can count 5 waves up. You start moving sideways. You gotta think about, okay, how can I enter along here, right? And if I enter along, where do I put my stop? Now, in this case, wave 4 was the area of support here, right? So that would be like your shortest one. Maybe take the FVG in a little bit of account, right? So you can put your stop below. And then you look for this, and then, yeah, maybe it's a wave 3, maybe it's a wave C. Well, in the end, it was a wave C. It's still solid RR. Well, but it's about taking the opportunity. And even if you enter and you had your stop below the low, right, and you move up, it's still money, guys, right? Most people are not profitable, eh? They're not profitable. But these small trades, you're like, oh, well, yeah, 1R. What the fuck? What do I do with 1R? Yeah, but it's 1R, right? And it's a win. And another day, this is not going to be 1R. On another day, it's going to be a 10R. But at least you took the opportunity, right? You entered the trade. You got the plan. And that's what's most important. And then you observe the chart. Here we got bearish CVDs, more bearish CVDs. You got to start thinking, quick move up, but now we start to, it's quite a long range as well in time, right? Long range in time. So we take a fifth time, we're like, well, yeah, we made another low on top of a 5-fifth time. And we got bearish CVDs. Okay, maybe it's time to close that thing, Then you close it a little late, right? Imagine you close it late, 1R. Okay. Oh, 1R. But on another day, it's not 1R, right? It can like over here. Ooh. In this case, you're not talking anymore about 1R, right? This was a bit messy, not gonna lie. But here, 3-wave move to the downside, right? You enter a position, right? Stop loss. You have a 3-wave structure. So a bit of margin maybe, whatever. And what happens? Oh, damn, we get another 5-wave up. Right? Okay, interesting. Oh, we got a 5 up. I might actually hold this now, right? You move your stop loss to below the low here because you got a 5-wave up and you wait. Okay, 3-wave correction. Another impulsive structure up. 3-wave correction. And then out of nowhere, boom. And then what happens? Well, there you go. You're 112. Actually makes me think there's a guy in my group in Diamond. He like, so of course I have strats that I trade more than just Elliott waves, but I have 2 shared in Diamond. This guy like 171R. Now I gotta be honest, that's not me. But Yeah, he was at 125 yesterday night, and then with price crashing down, he was at 171R. Oh, dude, what the fuck? It happens. It's not really Elliott wave related, but it's fun. It's fun nonetheless. But that's not your standard. I gotta be honest. The standard is a 1-3 in that setup. Not a 171 or a 125, but sometimes there will be that one setup which will be more than other days, you know. Yeah. The good old power station in the background. I know, right? I know. At Hut, I do think it's time for me to wrap it up, to be honest. 2 hours live. It's currently 8 p.m. So, yeah, it's time to, before I look into charts and start analyzing the many different ones. Okay. Let me at least have a look, but that's it. I'm not going to do alts after. I don't want to leave you hanging, but I got to go, guys. It's 2 hours live. It's been a good one. I don't even have it in my list. Is Hut a stock? Is it this one? I don't know. I don't know what the code is. Oh, I have a group here. What are we? On the weekly. I only have one scenario here. Well, I probably have to trust myself with whatever I did back in the day. I bet that in the video I was saying bullish scenario is a 1 up, 2 down, maybe continuation here, like a diagonal, whatever. Bearish scenario is 1, 2, 3, 4, 5 correction, another leg down. No, this move up, very 3 wavy. 3, 3, also 3. You gotta, this is by now, of course, an expanding diagonal. 1, 3. No, it's not. Or is it? Nope, not yet. Can still be contracting. One, two, 1, 2, 3, 4, 5, 4, 5. You might be looking at finishing a impulse down, right? And then I don't know what support. I don't have supports or something on my chart, right? So I don't know. Ooh, point of control is just below us. Okay, that's interesting. Now you might at least look for a relief rally, but this looks 5 wavy. 1, 2, 1, 2, 3, 4, 5, 4, 5. ABC would be bullish, bit of a long C though, ABC, but nonetheless, in both cases, looking for a bit of a bounce to come wouldn't be bad. Point of control is important support though. So, I mean, from the low, it's like 1, 2, 3, 4, 5. It's a solid move up, 1, 2, 3, 4, 5. And this is where this is very messy. You also got a sharp move down. But this final, I don't know what I said in the last video, but this looks like a bit of a 3. So probably, alternatively, I said ABC, W, X, ABC, that's your Y. So that is why this can be a 2. But then you need, of course, impulsive structures up, which is a little challenging with all the 3 waves. Up. Of course, it's too high for a flat. Yeah, it's too high for a flat, really. So it's almost like it's 3, 3, 3. Eight, 8, 6 is touch, so this is not going to be another 1, 2, 3, 3, 3. Zigzag, question mark, zigzag. Yeah, I don't know. It doesn't look, it doesn't scream buy to me. Locally on a lower time frame, there might be an opportunity coming though. 1, 2, 3, 4, 5, 3 wave structure. 1, 2, 3, 4, Maybe a bit of a longer 5 here. 1, 2, 1, 2, 3. Question, is this 4, 5, 4, 5, or is it 4, 5, 4, 5? But it feels like you're moving into 4 5s now on a 4-hour daily time frame. So it becomes interesting to look for supports and then local signs of strength. Yeah. And I would play this one. I wouldn't think about, oh, where is it going to be in a year? I would really be looking at what's happening locally, and if it works out, then I might hold for a year. But it wouldn't be the reason to enter. When are we considering bear market? Below 49K. By that time, of course, you already had a significant move down. Look, possibly you're already in a bear market, but people might still look for the... so I'm not really bound to terminology, right? When are we in a bull market? Where are we in a bear market? This was shared on Bitcoin, of course, for a long time, right? 1, 2, 3, 4, 5, and then locally, couple of 1, 2s, 3, couple of 4, 5s. We were looking for maybe one more high and a drop, but by all means, this was important, and we got the drop. Now, this is your most bearish scenario. However, the reason why a bear market at the moment is a little bit tricky to give the highest probability is because this move is very corrective. So if you really want to move in a bear market, you need a lot of acceleration. You need a dip or dip. You need a dip. You're gonna get a dip, but you wanna see a deep move. Oops, come on back. So let's look at the previous one. Look how sharp they are. Sharp move down, corrective move up. You're gonna look for price to take out this low. This is where the probabilities were highest for a bear market. Right? Sharp down, break structure, corrective move up. Right? When we were counting this back in the day, look for the low. And it went deep. It was a deep one. Also here, you can see how fast, how deep it goes. Right? We're not slow. We're on a daily. Right? It goes quite fast. 1, 2, 3, like 4, 5, corrective shemangs, whatever here, and then poof, you get the next leg. But at least you can see and count. Like, look at the gap here. Right, there is the potential here for a 3 because there's no overlap. 1, 2, 3. Maybe that's your 4. Maybe this is your 4. Doesn't matter. You can count an impulse. Then you have a shallow correction. You get your next leg down. Right. And that is your potential W. Or this is 3, 4, and you look for a 5. Because this was corrective, but anyway. And now, where we are at the moment, look how messy. You see how messy it is? You see how much overlap there is as well? So if we want to go in a bear market, we need to create a gap. We want to see a significant move. Look how slow this is in comparison to the other structures, right? That I can zoom out like this. You can can you compare? No, wait. Let me use where is it? Bars pattern. So that's 1. And then, let's do this. And then there. Don't forget, these moves are big, eh? So these were significant moves down. But look how steep the beginning is. Of course I can act like, oh look, perfect overlap, but that would be cheating because every pink bar is 1 day. Every normal bar here is 1 day. Right? You can see I can't do this. I can say like, oh, but it's exactly this. No, it's not. Right? I got to do something like this. If every 1 bar is 1 day, I can't. Yeah, very sharp. Same here. You can see how sharp the move is. Right? So yeah, and we have we gapped in the beginning. Yeah. So at the moment, there's no reason yet to think like, oh, bear market. However, what I do suggest though is to avoid focusing too much on the terminology bear market, bull market, focus more on the moves, because bear market is still money market. You can make a lot of money in a bear market. It doesn't change. Elliott rates doesn't change. The trading doesn't change unless you're preferably a buyer compared to a seller. But a bear market tends to also create a certain fear. People might act differently, but if you remove bear bull market and just trade what is, it will probably help you in trading. And by all means, on a weekly time frame, bear market or bull market, I spoke about this scenario so much that we were always going to look for the potential of a retracement to come. Because on a weekly, we had 1, 2, 3, 4, 5. And on the daily, we were looking for a couple 1, 2s, 3, couple 4, 5s, maybe one more high or not, right? That was the question. But looking for a retracement anyway. And that is what we had. Now, are we in a bear market after these 5 waves? At the moment, this feels corrective, not impulsive. So I would suggest in that case, no, it doesn't feel like it. We haven't created any gaps or quick moves. It's very slow. Very slow. CVDs. I think the biggest tip to I can give you is use CVD in combination with your support and resistance areas. Okay. So, I removed my box. If you go down a couple of videos and you go to like the 26th, 7th of March, right? We had a resistance box here, remember? And after touching the box, we had bearish CVD, right? The first one, bearish CVD, bearish CVD, bearish CVD, right? So you have bearish CVD stacking, market structure changing, potential of a diagonal with bearish CVDs. That's interesting, right? Similar, approaching support here. Remember, we got to move down. Potential for a 5-wave impulse finished. You're at support, and price locally here starts to create bullish CVDs. That's interesting, right? So use CVDs in context with your support resistance areas, and also keep focus on market structure. So if you are in bullish market structure, like it can be any time frame, but you take out the high over here, high, higher low, higher high, higher low, higher high, higher low. You have bullish CVDs at support. That, it's the context. You're like, oh well, that looks very interesting. It starts to be interesting. Of course, here price is moving up, right? So far, you have high, up, 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 right? We have not yet taken this low, but we did hit resistance. So you're from a context point of view, you're like, well, there's the potential for a diagonal. There's the potential for a WXY. We hit resistance. Well, maybe one more high, 1, 2, 3, 4, 5, or at resistance and we go down. Well, let me take some time, right? CVDs need time to form. So you are like on the sidelines, you wait. And you're like, well, locally we're changing market structure at resistance with CVDs, bearish CVDs stacking. Let's see if I can show you that part of the chart still. There you go. So bearish CVDs are stacking, right? At resistance with bearish local market structure. It's got to ring a bell. Huh? And then even you break, this was also interesting. So you break structure, you go below, and you get here more bearish CVDs, which is over here. Right? So you break the structure on volume, more bearish CVDs, right? So use it in context. Of course, I use it also with Elliott waves and my boxes. I love my boxes. But that's a good way to implement it. No, where's chat? There's chat. Sorry for that. I want. Hey, Mark. By the way, how's your house doing? Because hey, you're so close to finishing all the stuff. Now you're back in the chat. Now I start to wonder if you're ever gonna finish your house. What's up, Sibel? How you doing? Yeah, we need a mod in here. It's time. It's already 2 hours 22. At 2 hours, I was like, guys, I gotta go. I gotta go. When Ataha, when ATH, when all time high, when all time low. That's a bigger question. Yeah, all time high, matter of time. When are we gonna see all time high this year? It's April. Yeah, I can see it happening. I can see it happening this year. Finish. 1 second. I'm thinking. Yeah. Yeah, I can see it. I had to think about the scenarios, but yeah, another one. I am high all the time, rapping all the time. Sibel is a rapper, everyone. 15-minute or 1 hour CVD. If I have to make a choice, then I prefer the 15-minute CVD. Or are you talking about what's happening locally? So we're at support, right? 76K got touched, 5 wave up, 3 wave down, bullish CVDs. Got the second leg up. Bullish CVD, bearish CVD. That makes it a bit tricky. All right, so this is the interesting one. After you touch support, 5 wave up, corrective move down. But oh, wait, is this spike? Maybe we can go to 3. Oh, no, it's there. The 1 minute time frame. Generally, I avoid this. Yeah. Yeah, the problem now is you can't really look into this structure. A, B, C diagonal. That would, of course, be bullish. Then you look for price to take out the high. And then you can look for W, X, Y, double zigzag. Touch 83. I would like 83. I wouldn't mind 83. Right. I mean, you're at support, bullish CVD, bullish CVD. It's, bearish CVD is a little less significant because this was not really at resistance. We touched the 618, but the local structure is up. The problem is I don't really bull and bear. I'm not a fan. Right. So the first one is move up 5 waves, 3 waves on support, bullish CVDs. That's interesting. As explained earlier, this move up now is a higher probability 3-wave structure. Bullish would then be a diagonal, which is too early to call. But if you move up, 83 is nice resistance. You can get a W, X, and then a wave Y. So right? Hit resistance, 5 wave down, 3 wave up. That's my short right there, and then upla. Yeah, I'm literally at the end of my. I gotta say, guys, today was a tough day. Today I did not have a good day. Not that I'm not sick or whatever at all, but today was just a really bad day. I don't know. Sometimes I didn't trade, by the way, and I didn't lose or whatever. It just sucked. Like it took me so long to get a video done and think about what I wanted to share, and time was flying. I don't know. Like today was crazy. Like I looked at my watch. It's like, fuck, like, holy shit, where did time go? I recorded 2 videos today, by the way. I recorded 1 video, and then I was like, yeah, but I forgot to talk about this area of support in the video. And I was like, am I going to include that? And then my perfectionist brain, of course, says, yeah, Koen, you should include it. Like people, you need to give them all the information. You can't leave out. And then I'm like, And then, of course, I tried recording again, but then I keep fucking up and mistake. And I'm like, am I going to include this scenario now or not? And then I'm like, nah, let's keep it more simple. Man, guys, it took hours. And I was like, I have other stuff to do in my day. I just didn't get to it. And then I was like, you know what? I'm just going to chill the rest of the day. I'm going to go live on YouTube. I made my video shipped out on YouTube. Then, of course, what also happened is I put the video online right here, talking about the 618. Less than 30 minutes later, we touched the 618, and I'm like, well, there goes the video. We touched the 618. Oh, what a day. What a day. Well, it's not there goes the video because it's relevant information. And that's why I started the live stream to cover stuff. So I need to rewatch live all back. Is a lot of, yeah, at the moment, if you look at the 15, probabilities are higher. This is a 3, which means probabilities are higher to take the low. It only really changes if you get a diagonal, which is too early. Or this is a low probability multi 1-2, which again, low probability. And the reason why probabilities are low, this is a multi 1-2, is because your second wave 2 is over 4 times longer. Where is it? Than your second wave 1. You can see the orange fib time is 4, low made here. So therefore probabilities are higher. This structure up is A, B, sharp, C, right? And that increases probabilities to take out this low one more time. We have golden pocket below. We have the 73K previous all-time high, support resistance level. We have 68K. Arguably 68 or 83 would be interesting, but if to reach that, I would probably go for like WXY, ABC, correction, ABC. And I am interested to short if we hit 83. So then what I want to see is 83, impulse is structure down, correction up, maybe some bear CVD, for example, and then that's where I retracement, and then that's where I'm interested. But yeah, it doesn't look very bullish on the lower time frame at the moment. I know. Guys, there it is. Boom. Wait, what did I do? There we go. There we go. It is time for me to wrap it up. Yo, everyone, thanks for being here. Thanks for making the day a little bit more enjoyable, because I had a really shitty day. I'm not gonna lie. Sometimes it just doesn't work out. You know, either you're not focused or whatever. But we pull through. So and we had a fun live stream. Right? Sometimes you have great days. Sometimes you have shit days. Most of the days are hopefully okay, good, average, happy. So thanks for being here. Keep an eye on the thumbnail. Watch the levels, right? Watch the levels, okay? So we have 83 above us. We have the golden pocket below, 72 to 69.5. 68K is the blue support box. Probabilities on a very low time frame, right? 5 minutes, 50 minutes are at the moment higher to still take out the low. Even if you move up to 83, probabilities for a WXY double zigzag are higher than a multi 1-2 or a diagonal. And we will see. At the moment, I am not interested to short. I'm not interested to long. I'm interested in sleeping. That's probably what I'm interested in. And then hopefully later this week, we get some better stuff. Last week was great trading. Not gonna lie. Last week was good. We shorted at resistance, longed at support, the way we like it, with bearish and bullish CVDs according to Elliott waves. So it's nice. It was nice. Covered in the video, but now this week starts slow. We'll see. Today Monday. And we have some news later this week on Wednesday, Thursday, and Friday. So yeah, you gotta keep an eye on the volatility. But hey, we will be here. I will be here, and many of you will be here chatting with each other and with me. So yeah, you first, Mark. Okay, yeah. Thanks everyone for watching. I will put the timestamps in the live stream. So if you come back to the live stream in 10 minutes. The timestamps will be there and you will have an easier time navigating through all of the content. So, yo, I'm going to see you tomorrow. Bye-bye.